If you have money in your bank account, you probably think it belongs to you. But legally, it doesn't. The moment you deposit money into a bank, it stops being yours. Think about the last time you checked your balance. A number appeared on a screen, maybe an app, maybe a website. And that number felt real. It felt like something you owned. You've been told this your whole life, that a bank account is a place where your money lives, safe, waiting, yours. But that's not what a bank account actually is. That's not how it legally works. That's not how it has ever worked. And the strange part? It's not hidden. It's written into contract law. It's the foundation of how money has functioned for over 2 centuries. We just never asked the right question, which is, what does it actually mean to deposit money? In most countries with modern banking systems, the United States, the United Kingdom, the European Union, when you deposit money into a bank, that money legally becomes the property of the bank, not a copy of your money, not a representation of your money, your money. In return, the bank gives you something, a promise, a contractual obligation to pay you back an equivalent amount, on demand, under normal conditions. In legal language, this is called a liability. You become the bank's creditor. Not its customer in the way you imagined. Its creditor. The number on your screen is not a balance. It is a record of what the bank owes you. That distinction sounds small. It isn't. Because the bank doesn't keep your money sitting somewhere. It doesn't lock it in a vault with your name on it. It moves it. It uses it. It lends it to other people. This is called fractional reserve banking, and it means that at any given moment, the bank holds only a fraction of the total money its customers believe they have. The rest exists as promises, as claims, as numbers on ledgers. This is not fraud. This is not a conspiracy. This is the system, and it works most of the time, because most people never ask for their money all at once. When they do, it has a name, a bank run. And historically, bank runs end one of 2 ways. The bank closes, or the government steps in. So if money isn't physically sitting in your account, what happens when you spend it? When you pay for something, a coffee, a rent payment, a wire transfer, no physical money moves. What moves is information. A message travels from your bank to another bank. It says, reduce this account by $10, increase another by 10. The money never moved. 2 ledgers changed. That's it. This system is called interbank settlement, and it runs through a small number of centralized networks, operated by central banks, government agencies, or privately owned clearing institutions that most people have never heard of. In the United States, one of the primary systems is called Fedwire. It processes trillions of dollars every single day. You have never interacted with it directly. You never will, because the system is not designed for individuals. It is designed for banks. And the central bank, in the U.S., the Federal Reserve, sits at the center of all of it. It holds the accounts of the banks. It settles the transactions between them. It decides how much money exists in the system at any given time. Your account is a layer above all of this, a layer that you can see, a layer built for convenience. But underneath it, the actual movement of value happens somewhere you don't have access to, and you never will. None of this means the system is secretly stealing from you. What it means is simpler, and in some ways more uncomfortable. You are dependent, not because someone forced you to be, not because you were deceived, but because the infrastructure of modern life was built around this system, and there is no realistic way to participate in that life without participating in the system. You need an account to receive a paycheck. You need an account to pay rent. You need the network to send money across a city, let alone across the world. Cash exists, but cash is increasingly excluded from online transactions, from automated systems, from the architecture of how commerce works today, and the alternatives that have emerged. Cryptocurrency, digital wallets, payment apps, most of them still connect at some point back to a bank, back to the same network, back to the same ledger. The walls of the system are not made of iron. They're made of convenience. And that's what makes them so effective. When something is uncomfortable to leave, most people don't leave. They adjust, they adapt, they forget to ask whether they ever had a choice. Here is what's true. The banking system is not a conspiracy. It is not secretly designed to harm you. It is a structure, an old one, built over centuries by people solving real problems. How to store value, how to move it, how to make economies function at scale. And it works. Most of the time, it works remarkably well. But there is a difference between a system that works for you and a system you depend on. And there is a difference between owning something and being owed it. The number on your screen is real. The promise behind it is real. But the money, the actual thing you picture when you think of money, has been somewhere else for a long time, moving through systems you've never seen, recorded in ledgers you don't control, held by institutions that answer ultimately to forces much larger than either of us. The system doesn't need to take your money. It only needs to control where it exists. If you find value in understanding the systems behind wealth, power, and history, consider subscribing. Here on Silent Standard, we explore the financial strategies, institutions, and ideas that shape the world we live in today. Thank you for watching.